Alright, so if you have been trading if you've been trading Cabela's with us, you're probably loving Trader's Base right now. Let's take a look. Trader's Base, where did we enter this? We entered... Yep, we entered a call option at $4.30 with an equivalent leverage of 65 shares. And that would be equivalent to about entering around 26.50. Alright, they had great earnings yesterday. It's just been climbing up very slowly this entire time. We've seen a couple little patterns. We had a small flag right there, another flag right there, and a final flag right here, and then finally broke upward. So all these gave us, it's been a perfect trade, and this has been fundamentally based too because it has good earnings. So what are we doing now? This has a price target, the pattern, of $35. There's also another pattern that is on Bolkowski's site that's called Good Earnings Surprise, which obviously this was. You take the height of the intraday range of the earnings day, project it from the very top of that, and it gives us a price target of just about $35. Notice the symmetrical triangle also gives us a target of $35. Therefore, at this point, I really believe once it hits $35, you need to hedge. Either get out and take your gain, which is about 100% right now on the option, or on the stock. If you bought at $26.50, it would be, let's see, 32 minus $26.50 gives us about $7.50 over. We're running about a 28% gain on this. So what I'm going to do, if you are playing the options, ever since the stock got a little higher volume, it seems market makers have stepped in to make the spreads of the stock tighter. So we currently own the, where is it? We currently own, if I can go on this right here, we own the September 25 call. We want to convert this into a free trade, or at least hedge it. So we have two choices. The first one, we can, when it hits 35, so I'm going to use a theoretical price calculator. So that's about $3 from where it is today. So 3, that gives us a theoretical price of about $4.14. We bought the option for $4.30. So if we sold that option, if we sold that option for $4, and we'll just say 10 cents, and we take a look at our profit and loss chart, that's going to create a trade for us that has a maximum risk of $18 and a maximum gain of $982. And that's if Cabela's finishes above 35 by September, we make $982. Okay, so why don't you just want to hold on the call? Okay, let's say Cabela's finishes at 35 in September, and we just have the call. Our gain instead is about 600, which, okay, yeah, that's good, but I like 982 more, and that means I don't need to deal with intraday risk because I'm nearly perfectly hedged. So sell that call, or if you want to, if you're feeling really risk averse, let's see, theoretical price, if we sold the 30, would be $7.21. So this is when it hits $35 when we want to do this. So if you don't feel good about this stock and you think it's going to go down, we can sell the 30 call at $7.21, which gives us a maximum gain of $7.93 and a maximum loss. Look at that. We don't even have a maximum loss. Our maximum loss is a profit of $293. So it's going to be up to you. Do you want to hold it and get a maximum gain of $800 if it closes above 30? Or do you want to hope it closes above 35 and give yourself a maximum gain of $1,000? It's going to be up to you. I'll keep you updated as I go, and till then, just wait for this, because it's not done yet. It's definitely not done yet. I bet that once it gets to 35, you're going to see a ton of hanging man patterns and you'll see people dumping it. So you'll know when you need to sell. All right? Happy trading, guys.